first steps into the world of cryptocurrencies.
Back with you, I'm Slav Marinov, and with me is Nikolai Delchev. Nikolai, I know that you've published a book which covers a very interesting topic, and it's eloquently named The 10 Crypto Commandments. It's been circulating the internet for the past couple of months from your forum website. What are the main rules about dealing with crypto?
So again, this ebook came about during my, let's say, professional experience with cryptocurrencies in general, and I tried to summarize and put into one place basically the main things which every, let's say, newbie needs to know when he goes into the crypto markets. So starting off with, of course, number one, you never put in money which you're not ready to lose. Because again, people see and hear, oh, I've made 1,000, 2,000% increase of my money, and the fear of missing out is very strong, and then people tend to do stupid stuff, basically take out loans or putting more money that they're willing to lose, and they then don't have, let's say, they have sleepless nights, which is one of the key stress factors in the crypto market. I tend to sleep well at night, and that's because I follow this rule. So yeah, this is why it's number one. Second one, basically is you only buy and you only store cryptocurrencies in verified and really proper exchanges and wallets. You need to do your due diligence on that, because again, the most important thing for cryptocurrencies is where you store them and where you buy them from. So this is the second let's say commandment. The third one is you always look at what is happening with Bitcoin. Bitcoin is supposedly the flagman of the whole cryptocurrency market. So in general, with Bitcoin swings, a lot of swings come about with all the alternative coins which are not Bitcoin. So it's very important for you to keep an eye on Bitcoin and see what is happening. Because in some cases, when Bitcoin's going up, a lot of people try and catch the wave. So they extract their money, let's say, from altcoins and put it in Bitcoin. So it's really something that you need to keep an eye on. Fourth, of course, is you need to do your due diligence on the currencies specifically which you're investing in, whether it's going to be altcoins or ICOs, initial coin offerings. You really need to do your due diligence. What's the team? What's the white paper? What's the technology? Is there a working business model? You should consider cryptocurrencies and altcoins as, let's say, a small or medium enterprise and business, and that's why it's very important for you to be well aware of what you're putting your money into. The fifth one is, of course, you do not put everything into one or two cryptocurrencies. As per coinmarketcap.com, there are more than 1,500 different cryptocurrencies. So if you have a crystal ball, it's fine to keep your, let's say, your fiat money into one of those. But I would suggest diversifying and really putting it at least in 5 to 10, because again, in 3 to 5 years, you don't know if 99.9% of all cryptocurrencies may fail, which I strongly believe. Number 6. If you're a day trader, you should really put on stop losses. So this is one of the things, if you're really going to actively trade or not just hold, not just hodl the cryptocurrencies, you really need to put on stop losses on your traders, because the volatility is very high and you may lose a lot of money if you don't do that. Number 7, you do not keep your cryptocurrencies in the exchanges. So there are numerous examples of crypto exchanges that are being hacked and the wallets are being drained out of all the cryptocurrencies. So really, I do not recommend keeping a lot of cryptocurrencies more than, let's say, what you're really doing for the exchange itself. So you put the money in the exchange, do the exchange, extract to your own wallet. Never keep a significant amount of cryptocurrencies in their exchange. Number 8. You should not troll or hate on other crypto communities, with some exceptions, of course, like BitConnect and so on. So really, it's really important to call out a scam as a scam and really an investment as an investment. So you should do the divide between those. Number 9 is do not cause FUD, or speaking, let's say, fear, uncertainty, and doubt, because the crypto market is, let's say, relatively small, and every type of fear or uncertainty or a doubt in terms of a cryptocurrency may cause a lot of swings and a lot of people may lose their money. And number 10, it's more of a general, let's say, commandment when it comes to investments. You buy the rumor, you sell the news. So as your trading progresses, let's say in the months and in the years, you'll see that basically you need to really be aware of who is going to sell what before they sell it. So wrap it up in one sentence: you buy when everyone sells and you sell when everyone buys. But again, this is something you need to be aware of, and not everyone may be aware of this in the very beginning. So yeah.
Thank you very much, Nikolai. We'll be glad to see you again soon.
Thank you.
We will now have a Skype call with Vladislav Dramolev, who founded BitHope Foundation in 2014. The foundation owns the first Bitcoin crowdfunding website in Europe that is dedicated exclusively to helping non-profit organizations acquire additional funding for their charitable initiatives. Vladislav stays as well behind coinfixer.com, which provides local cryptocurrency brokerage services, essential information regarding the usage of decentralized digital currencies, and news from the cryptocurrency sphere. He is also currently involved in the process of developing Eternity blockchain. Hey Vlad, it's great to have you on our pilot show, The Academy. How are you today?
Hey guys, I'm good, thank you.
How is your foundation BitHope doing lately?
Oh, it's actually great. We just recently published an article about our work in 2017, and we're very happy to say that we managed to help a lot of different projects with money which we managed to generate with cryptocurrencies, and primarily Bitcoin actually.
We already introduced to our viewers the basics about the philosophy behind Bitcoin and blockchain. We would like to go more into depth with that, ask you to explain a little bit to our viewers.
Okay, sure. What would you like to know? Bitcoin or blockchain?
Let's start with blockchain, since that's the essence of Bitcoin.
And blockchain technologies, for me, it's primarily should be connected or should be viewed as in its public variation. I think this is more interesting. But for as in general, what is blockchain technology? It's more or less a cryptographically secured database, or you can say that it's different, innovative way to reach multi-party consensus about who owns what, who did what, when, and so forth. And you can use it to keep track of different actions that have been taken inside of a company, or as in the case of a public blockchain system, or in the case of Bitcoin, to keep track of who owns how many Bitcoins, and when did he receive them, and where did he send them, and so forth and so on.
Right. Are blockchain and Bitcoin separable, though?
That is the very interesting question. I would say not so much. I'm personally more interested in seeing how blockchain develops as a public system, in public systems, let's say. And I think this is its primary, so to say, nature to function in a public setting. I would say, having in mind that Bitcoin is actually the currency which stays behind a system and stimulates, incentivizes people to push the system forward, to develop it further, to keep it secure, and so forth. I think it's very hard to speak about a blockchain which is private. I mean, the whole idea of a public blockchain, or the big challenge actually, is how to make a system very open to everyone, very secure at the same time, and in the same time to help people make sure that the system stays that way or continues to function in the future, continues to provide the services that it provides in the future. And it's very different in the case of private blockchains, because in private blockchains, again, you have this institution or a couple of companies which need to make sure that the system stays secure. So the security model is very different for public and private blockchains. And I think the public variation, the public version of blockchain is much, much more interesting. And there is much more research and development there that needs to be done for the future. So to keep, in order to be able to keep these systems secure and functioning in the future.
Is that the primary challenge that Bitcoin needs to overcome in order to be more widely adopted?
Well, scalability is currently, I would say, the most pressing challenge, and also privacy, fungibility. These things need to be addressed, and they are being addressed with a lot of different software upgrades, which are being discussed and currently being tested in order to be implemented in the future. For in the case of Bitcoin. When I spoke about the security model and the security model of a very open blockchain system, this is also very challenging. From the security model, there is this challenge that is being created, which makes the system very hard to scale. And scaling means how many transactions per second the system can go through or can manage. And currently, Bitcoin is not performing as well as centralized solutions. But I believe with the addition of SegWit, of the Lightning Network, and then some other software upgrades which are upcoming, I think Bitcoin will become even more even a better system, and it will be able to reach even more people in the future.
Okay, let's go through some terms then. What is proof of work? It's a very important concept in blockchain Bitcoin. Proof of stake and hash function.
Okay, proof of work is the so to say the proof of work consensus mechanism is very central to a public blockchain system as Bitcoin or as Ethereum. And proof of work basically means that is this idea that only people, or only miners, only users who have done a certain amount of work and they have proven that they have done this amount of work, they have found a solution which cannot be found in any other way apart from doing this work. You need to do the work to find a solution. And if you have the solution, it's certain that you have done the work. And this is, of course, possible through cryptography. But proof of work is basically this: you have done an amount of work, you have found a certain solution, and because of that, you get rewarded. In the case of Bitcoin, with some Bitcoins, brand new Bitcoins that are being created, and you are also allowed to create a new block in the blockchain system, which includes transactions. So basically, you are allowed to do some clearing and settlement of transactions in the Bitcoin system. Because you have found a solution, because you have done the work, and for that you are rewarded with Bitcoins. And it's the same case of Ethereum. You're again finding a solution. If you find a solution, you're rewarded in Ethers. And this also goes back to the idea that a blockchain needs a cryptocurrency, because with the cryptocurrency you reward people to make sure that that system is secure and that clearing and settlement activities are happening in the system. For proof of stake, it's a different type of consensus mechanism, which some of the new public blockchain systems are looking forward to implementing. Ethereum actually is one of those, but it has a lot of challenges, because with proof of work, you need to have something physical, a machine, some kind of a miner, which does physical work. It costs electricity to run it. The machine itself costs. And you have this connection with the real world when it comes to securing a public blockchain. And with proof of stake, there is no more mining with hardware. You basically stake currency. In the case of Ethereum, you stake Ether. And by staking that Ether, you take a vote on which the next block will be. And if you are right, and the next block is the one that you have selected, you get a certain amount of new Ethers, which is a percentage of the amount that you have staked. And basically you're participating in some kind of a process of mining, but which does not include a hardware device. It's just doesn't need computer power. You just stake currency and you try to figure out which is going to be the next block. And if you're right, you get some kind of a reward.
Great.
And what was it? The hash function?
Yes, that was the last bit about
The
that.
hash function is hashes are very central when it comes to cryptocurrencies, and also they are very much related to the cryptography of cryptocurrencies. And a hash is a function which creates, let's say you have some digital information, could be a photo, could be a text, could be anything, and you run it through a hash function. And what's going to come out on the other side is just a string of numbers and letters, which is with a fixed size. And if you have that string, you cannot determine what the information was when you did this conversion or you hashed the information. You cannot, from the hash function, you cannot restore the whole document, let's say, or see the photo. But you can, looking at the hash function, you can be sure that in the future, if somebody does some kind of a change to the document and you hash that document again, the hash that comes out is going to be totally different. So basically, using hashes, you can be sure that that the information didn't change in the past; it stayed the same. For example, if I hash my something as an essay currently, if I hash it, I produce the hash currently, and I save that in a blockchain system, let's say Bitcoin, I send the hash there with a transaction. I add it as a description to my transaction, let's say. After 5 years, I can go to someone and say, you see, this is the document currently that's in its current state, and I can prove that I have created this document in this current state 2 years ago by providing the hash of that document at that time. And basically, it's going to be in the Bitcoin system, so it's immutable. It will be there as long as the Bitcoin system exists. So I can, no matter how much time it passes, I can prove that this document has been created at a certain time in the past in its current form or the form that I'm presenting it in. And so whatever the information is inside could be proof that has existed no matter many years ago.
Unfortunately, Vlad, I'm going to have to stop you here because we're running out of time. Wonderful conversation. Sure. We'll definitely keep having you on because it appears as though you have a little bit too much to say about Bitcoin. Definitely thank you very much for having you. Have a pleasant day, and we hope to see you soon.
Yes, thank you. Bye-bye.
I hope you've all learned something new. Be ready for our next episode where we will talk about Lightning Network and the scalability of Bitcoin. Have a great rest of the day.